My portfolio as of right now is down 53%, or the equivalent of just over £18,000. So in this video, I'm going to talk about how I'm able to navigate volatility and cope with it as if it is just absolutely nothing. Now, I think this is a very valuable lesson or topic to talk about, because whilst you might go, well, you're down 53%, blah, 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 blah. Well, have you been down that much? Because there's two types of investors. The investor that's going to go down by a high amount and not know how to cope with it. And there's the other investor that has already been down by a certain amount or lost a certain amount of money and therefore can deal with it. And again, this is going to happen to everyone at some point. No matter how you play your cards and no matter how diversified your portfolio is, eventually there's going to be a point in the markets where they drop low enough that you're starting to feel uncomfortable. So there's a few techniques that I have in place here that I'm able to navigate it. First things first, on the screen you'll see here, this is my portfolio. I'm down 53.81%. These are my only two holdings in my investment ISA. Now, obviously due to my low level of holdings, my low number of holdings, I have therefore got a higher exposure to systematic risk. Systematic risk being the overall level of risk that is present, so that if one of my companies fails, how much of that will impact my portfolio? Well, there's at least a 50% chance here, although in this case, with Boohoo taking up 61.5% of my portfolio, there is a systematic risk there that I could lose 61.5% of my portfolio at any given moment. However, I've already precautioned for this, and I've obviously planned ahead, and I've not invested in companies on the brink of administration. But again, look, I'm down a significant amount. My annual salary is very close to that amount. I am, for instance, still very young. I don't have much more money outside of the portfolio. In fact, this is a majority of my net worth. So therefore, by that criteria, this should be impacting me. But in fact, I'm quite enjoying it, if anything. And this is what I'm going to explain. So there are a few ways I deal with this. First things first, that's not to say I didn't feel some discomfort with the volatility as it was happening. But as my portfolio was starting to drop, I didn't like it. So what I did, instead of just worry about it and panic about it, I decided to take action. I decided to sit down and go, okay, right, what's gone on with my portfolio? What's gone wrong? Okay, let me research my holdings. Actually, my third company here, Argo Blockchain, a former holding of mine, I don't actually understand what it does. It mines Bitcoin. What's Bitcoin? Well, Bitcoin is an asset with, I guess, no underlying value, because I don't understand the underlying blockchain technology, and effectively it is just speculation. Therefore, I don't feel comfortable with this. And it wasn't as logical as this at first, obviously, because what initially happened is that I was just getting stressed. I was grinding my teeth at the night time. I didn't know why. I just assumed it was other things or something else, or it was caffeine. But in reality, it was because Argo Blockchain was dropping, and I couldn't understand why, despite believing at first that it was an easy to understand business model. I guess the business model is easy to understand, but the asset that they actually deal with is a lot more complicated than that. So when I realized that, okay, look, Argo Blockchain is causing me some issues here, I was down 50%, I wasn't comfortable with it, I sold my position entirely. And since then, really, I've not looked back. Now, that's not to say, as my portfolio has continued to fall in value since that period of time, that I've not been somewhat uncomfortable, but overall I'm relatively fine. It's all about having different hobbies than the markets. If all you do is talk about the stock market, you go to work, you come home and you look at the stock market and you're doing all of this research, then obviously you're going to be depressed about it. If your stock falling all the time and you're tracking it every 5 minutes on your phone like a dork, you're going to see that and you're going to get annoyed. Whereas in reality, if you look at it from a long-term perspective, the idea that you're going to be holding these assets for 5, 10, 15, 30 years, then obviously you're not going to care as much. For instance, I've invested what I can afford to lose, which at my age, with low overhead cost of living for myself, I'm able to risk a lot more, and therefore I'm not afraid to lose all of this money as well, once more adding to that level of comfort that I have available. But I also have other hobbies. I don't purely exclusively look at the stock market, and again, I do other things. Very recently, I've taken up driving a motorcycle. Now, this is a fantastic way of dealing with stress or emotion, because you can go, right, I'm going to go drive in a random direction and I'm just going to clear my head. Now, you've obviously got to be safe with this, but I'm not going to get into that. And because you have to be very alert, very conscious when you're on the road on a motorcycle, because anyone can kill you effectively, you have to be very fearful. You have to drive like you're invisible, and that level of thought puts so much focus into your road awareness and your alert and your skills that actually you find that you resolve a lot of problems during that. You've taken time away from all of this stress, all of this other stuff, just to be on the road, and you're kind of in like tone with your own body and your own instincts. And that is a great way, in my opinion, that I've managed to deal with this kind of stuff. stuff, albeit the volatility hasn't bothered me that much now that I'm down about 50%. And you might say, well, okay, well, it's only a loss until you sell. Well, I disagree with this because yes, you're not wrong. I haven't lost this money, I've not sold, so therefore I've not crystallized the losses. But there are so many people that look at it in such a deluded manner, it's ridiculous. Well, they're like, well, I'm down 80% on this mining investment, and this mining investment is like drilling in certain areas. I don't know why it's American, and they're doing this. Yeah, oh, it's drilling in certain areas, but I'm down 80%, but it's fine. It's not a loss until I've sold, even though the fundamentals of the company are deteriorating rapidly. This company is on a downwards trend. You can see exactly what's going wrong with it. In fact, their last 3 drills came up with no results. Oh, there was a bit of mud down there. That's not valuable. What can we do with mud? So obviously that the share price is tanking, but they're fine. It's not a loss until you sell, and it's a way of fooling yourself. It's a buffer, as I might say. It's a way that you can convince yourself, actually, it's fine. I don't have to sell yet. Therefore, I don't have to accept this responsibility of selling at a loss. And that is a very bad way of taking it. I do understand the mentality behind it, but I don't think this is a great way of reacting, because it also means you're more likely to hold on to a losing stock that is losing its value in a destructive way and really not learn a lesson from it. Another important thing to be doing is a lot of physical exercise. So this could be in any way, shape or form. But if you're going out and you're exercising regularly, as a guy, if you're going around picking up heavy shit, you don't have that energy, that level of stress to really care that, oh no, some of your stocks have dropped by a certain value. It doesn't matter. You've just been picking up and deadlifting 140 kilograms and your weight is half that, then obviously you're not going to care. Why would you? Because you are now absolutely relaxed. You are tranquil after you've done a serious workout, and therefore you can be very, very focused. You lack emotion in that period of time. Your testosterone is higher, and therefore you're able to think a lot more coherently. Although your testosterone changes throughout the day, obviously, and that can lead to anger, but that goes on, and I digress from that point. Lifting heavy shit, regularly exercising is healthy for the body, and therefore you've got a healthy body, you're going to have a healthy mind, you're going to be able to deal with these losses in a much more constructive way rather than sitting there and crying because your stocks are down. Now, there are some people that go, you know what, look, if my stocks are down, well, then I just won't look at my portfolio. I'll just ignore it. It's fine. If I push it away. But again, what you're doing is you're bottling up your problems. You're saying, look, I'm going to chuck it in the corner of the room, and when I open it again, I'm obviously going to have all those problems still there. It's about hitting your problems face on and going, you know what, look, fuck this. I'm going to go and tackle these problems. These problems, are they really problems? I'm going to sit there, box myself in a room, sit in a cupboard. You know what I mean? You've got one saucepan down there and you've got a tin of beans. You sit there and you come out once you're eventually able to say, you know what, this is my problem and this is what I'm going to do with it. Until you're able to say, you know what, I'm going to take action. I'm going to therefore come up with a solution to this problem. Or is it really a problem? My stock Boohoo is down significantly. Is there a problem with the underlying business? No. Okay, what went wrong? Why is the shares down this much? Well, there's fear, uncertainty and doubt, but what accountability do I have in this reasoning? Well, actually, yes, I am to blame because I didn't invest in Boohoo on a purely valuation basis, and therefore I neglected to see that it was at a higher valuation, which now logically thinking, obviously in hindsight, I might have not have bought at such an expensive price to earnings ratio, and therefore I have learnt my lesson. That being said, now that the share price is falling, it is much more attractive, the valuation is much more attractive, and therefore I'm buying more. When you apply this logic to your investments and this clear, coherent thought process, as well as taking accountability for your actions, you realize actually you don't worry as much about your portfolio volatility. You go, okay, look, this is what I've done and this is what I haven't done. You're constructive about it. You go, okay, this is what I did wrong, this is what I did right, and you learn from it. The lessons that you learn, if you see it all as a whole program, a way that you are learning as a student, then you'll never truly get too bothered by it. Sure, now you could be in a different financial situation. Your portfolio could be worth 7 figures. Your portfolio in stocks and shares could be worth £3 million. And now you've watched this lose £1 million of its value, or a 33% drop. Now you might go, well, I actually am not earning any more money. I'm retired, I'm at the end, well, I'm in my 60s, I can't work anymore. This is a concern because now I'm not earning enough income for my day-to-day needs, which is a very good problem to have when you have 2 million in the market still. And therefore, yes, you need to position yourself accordingly. At this point and stage, would it be wise to be entirely in stocks and shares? Maybe not. Would it be good to have a good liquid level of cash or diversify into some real estate so that you have rental cash flow from some properties, so that therefore you've got different diversified streams of revenue so that you don't have to obviously sell down one of your portfolio stocks whilst you're at a loss? It's another way that you're able to cope with it over time. To summarize, lift heavy shit, find a hobby. Riding a bike is fantastic because it really keeps you programmed with fear. The third thing is, just because it's dropped a certain amount and you're saying, well, it's not a loss until you've sold, don't fall for that deluded mindset. If you've made a mistake, take accountability for it. My mistake with Argo Blockchain is I invested in something I didn't understand but believed I did. And my mistake with Boohoo is that I bought on too high of a price to earnings ratio. I didn't effectively value the business and its underlying fundamental value. Have a fantastic day.